Hi, how are you? Okay, um, today I'd like to talk about the meaning of this thing called the death cross. So I just want to share with you this news. Okay, stock market on verge of flashing death cross for first time in 2 years, suggesting more downside ahead. Okay, then the stock market is set to trigger a widely followed technical sell signal, suggesting more downside ahead. The death cross is a moving average crossover strategy that some traders use. Not all, some traders. This is not really related to fundamentals, but sometimes the 50-day moving average is actually related to the fundamentals of whatever that's happening, which is geopolitical, or could be that particular stocks, the quarterly results are not doing so well, and all that. So the death cost is triggered when the short-term 50-day moving averages crosses the long-term 200 days moving average. 200 moving average is about 6 months. Normally, it's a more tapered kind of line, and then whereas the 50-day moving average is basically like 1 month and a half, nearly 2 months. Is more the gradient are steeper for the crosses. I'll just explain to you how what do you mean by death cross. Of course, the word itself denotes that death is actually not a good sign for the nasdaq index. Usually people go for this kind of death cross or golden cross kind of and technical analysis is on index like S&P 500 and or Nasdaq. So a closely followed technical sell data is about to trigger S&P 500 for the first time in 2 years. So since March 2020, and that cross is a moving average crossover employed by some traders. Technical analysis as a signal to sell a security. So it shows that while the S&P is set to complete death cross by next week, the Nasdaq already flashes. So basically, the Nasdaq 100 already passed the death cross in March the 1st, but the S&P 500 hasn't yet. So as I mentioned before, I think all the S&P 500, you will, other than the oil and gas commodity stocks, right? You have all those other stocks like Royal Caribbean, Delta Airlines, which are suffering from high crude oil and high inflation or high input costs like higher salary or even higher raw materials to manufacture their products, could be steel factories and all that. So for me, I quite believe that S&P 500 will be moving further downwards, predicting the near future, especially the month of March and April. But the Nasdaq, as you can see, they have very little staff relatively, so their input costs are low. They just work on a few engineers or a few hundred engineers, or a few thousand engineers, and they can scale a business worldwide based on their software platforms or whatever. Or so this could be something that we could be focusing on the Nasdaq for this coming weeks. If and then we can decide whether our position is good to be long term hold or trade. So if you're looking at buying the dip, Nasdaq has really fallen around 7%. So and the Dow Jones Industrial Average experiencing 8. So of course, the opposing side signal of death cross is a golden cross, which shows as a buy signal. I'll just show you what a death cross means. Okay, death cross is actually like this. You see, the 200 moving average is always very tapered, the gradient very low. So the the death cross, if you see a share, I mean an index which like this is a Facebook up and down, and then you will see the death cross happening here, means that if you the few after that the chart right tend to go downwards, and then if you look at another one here as well, this one doesn't show the that what happened thereafter, then so, but basically, this is a very general formula that people use to understand the death cross. So this is probably the best one to show what happened after, whereby the 50 moving average will go further down, and the 200-day average will dip down as well. Okay, so Since we are here, I just wanted to show you, explain a bit more. Death cross technical chart pattern, including indicating potential for major sell-off, appear on the chart when the stock short-term moving average crosses its long-term moving average. Long-term moving average is 200-day. Typically, the most common moving average used in the pattern are 50-day and 200 days. So, okay, but since we are here, I just really wanted to share with you a bit about golden cross, bullish signal. I will put the link there. You can take a look. And I'll just show you how the chart actually works. See the golden cross is here. Usually, very flat 200-day. You see a low 50-day moving average, and as it passes here, the future prediction would be uptrend. So yeah, so there you go. You can see here as well. The golden cross is here. Um, it's because the reason, I think, if you see the short term 50-day moving average, right, it's actually going up. So it's like, looks like a breakout kind of chart. So the tendency for golden cross in terms of probabilities are the higher chance that it will continue to push up, and then that's the very the basic definition of the golden cross. So take note. I mean, understanding death cross, golden cross, as well as what's happening in the nasdaq. Coming up this coming in March and April. So thank you very much for watching. Please smash a like.